Good afternoon everyone, welcome back to another video. In this video I wanted to talk about the UK property market and whether we're heading for a recession. What do you think? I'll be interested to hear your thoughts. If you've got an opinion, drop it below. But in this video I want to give a mix of facts and my opinions as to what is going on in the property market. I want to lay it all out for you so that you can make the right decision for you and your property business as to what to do next. As you can see from the huge amount of notes I've put together, I've put a lot of research and time into making this video, so I'd really appreciate it if you could help me out by dropping me a comment, a like and subscribing to the channel. I'd really appreciate that. But let's start with the facts. What do we know? Well, we know the government has put huge measures into place to limit the damage that is currently going on in the economy. To start with, they lowered the bank base rate to 0.25% and they have since lowered it once again to 0.1%. They've also printed and made £200 billion of new money that is going straight out into the economy. Now that may sound like a great thing, but for anyone that's saving and has money in the bank, that's terrible news, because all it means is that inflation is rising again and the value of your money has come down once again. But that's for another video. We also know that unemployment has risen from 4% to 8% almost overnight, which is a huge amount considering that unemployment at its highest in the 1980s was around the 12% mark, but since then the highest it's ever been is around the 8% mark. So for it to go from 4% to 8% overnight is a big change within the UK economy. But with that being said, it's believed that the furlough scheme has saved many thousands of businesses and millions of jobs. In fact, they do think that the furlough scheme saved 1 million jobs just in day one alone, which is a huge result. And it's thanks to the government putting in measures quickly that they've managed to do that and stop the UK economy from completely collapsing overnight. Now, let's move on to the stock market. What can we tell from the stock market? Well, from looking at it overall, we can quite clearly see that as most stocks and shares have plummeted, particularly around the week between the 12th and 17th of March, that things in terms of business is down. And of course, what that means is the investor confidence is down, people pulling their monies out of stocks and shares often causes the prices to plummet at a rate. Now, a lot of them has since bounced back somewhat, but nowhere near to where they were before this pandemic. But if we go a step further and look directly at the estate agency side of things and the estate agency stocks and shares, it tells a very similar picture but gives us a bit more of an idea. Many people won't have heard of Countrywide because they are an umbrella company of many brands of estate agency within the UK. Now, what we can see from their share, of course, is that it has dropped quite drastically. It doesn't sound like that big a deal. Another company, the share has gone down. We've just seen loads of others. But once you see the amount of estate agency brands that Countrywide own throughout the UK, it starts to paint a bit of a clearer picture. Now, the fact they own so many estate agencies in the UK used to be a real big strength for them, you know, to dominate the market, have the monopoly of the UK. But in this instance, when things turn the other way, it obviously works as a negative. Now, if we compare them to the likes of Foxtons, it's a very much similar picture. Foxtons are one of the leading London estate agents, if you don't already know, and their stocks is also down. So it's clearly the same picture for estate agencies as it is with a lot of businesses throughout the UK right now, that the stock and share prices are down. Now, a stock market crash doesn't necessarily mean that there is an overall economic crash, but there is some correlation to suggest when one falls, then the other will follow suit. Moving away from these share prices, but to the predictions that some of these estate agencies have given, if we take Savills, for example. Now, for those of you that don't know, Savills actually came out publicly with a 5-year forecast for the property market, but this was back in 2019. They have, of course, since readjusted what their plan was and their forecast was. However, they haven't changed it as much as you might think, with their new plan stating that we are going to see a short, sharp dip following the pandemic, and then we will rise out of it during 2021, and the market will continue to grow until around 2024 to 2025. They also go on to predict that unemployment will continue to rise. Now, I mean, that's a fairly obvious one, but they also predict that it will continue to rise in 2020, but actually that it will level out and be back to its usual low levels by mid-2021, which is good news for a company as big as them to come out with that kind of announcement. They also predict that the base rate is currently at 0.1. They predict that to stay the same to at least mid-2021, with it likely to rise up to around 1.5% by 2024. Knight Frank, however, aren't so positive, with their prediction being that the transactions in 2019, which is 1,175,000 transactions, will fall to 734,000 transactions in 2020. That's quite a big factor to consider in all of this. In the most recent report that Zoopla put forward, they stated that £82 billion worth of property transactions were currently frozen due to the pandemic, which is an insane amount of transactions if you think about it. And they say it's the equivalent to 373,000 transactions that are currently there waiting to go through. So on the other side, that's a massive positive that when this goes back to normal, we have all of those property transactions which are currently going through and could therefore help boost the economy. But of course, bearing in mind that in the UK, depending on the time of year, we have 1 in 3 or 1 in 4 sales fall through. But as for Zoopla, they too believe that there will be a big drop-off in the transactions this year, and they've actually stated potentially 50% in transactions dropping off in comparison to 2019. But let's look at the build-up to 2020. 2016 to 2019, the property market was very much just plodding along. For a lot of the time, with Brexit going on, there was a huge amount of uncertainty in the UK. And that's meant that there was a lot of build-up and a lot of anticipation coming into 2020. With an election result in December 2019, which appeared to instill confidence in the UK market, it actually meant that many estate agents had record-breaking months in January 2020, and it looked as if it was going to potentially pave the way for 2, 3, 4 more good years of a housing market, potentially booming up once again, and it would very much fall in line with the 18-year property cycle. But there is something else to consider, and that's called the shock effect. Now, when a market recession comes about, or a downturn comes about, there is often a period of time in which the property market takes several months to adjust. As vendors have had valuations in December and January where their house was valued at £200,000. It's the most it's ever been, and they're really happy about that. In fact, they want to sell, they want to move potentially, and they've got this figure of £200,000 in their mind, and they either went on the market or they're about to go onto the market with that figure, and they're very attached to it. However, the pandemic has come, or the housing downturn has come, and their property is no longer worth £200,000 in the eyes of the buyers. When this circumstance comes around, it turns to a buyer's market. So there's often a period of time where the market needs to adjust, because people will be coming in and viewing and offering at a lower price. That house may now be worth £175,000 or £180,000, yet the vendor isn't willing to accept that because they're still attached to this price they've been given several months before. And then time goes on, viewings happen, offers happen, and eventually, after the agent has spoken with the vendor and suggests either a price reduction or accepting a lower offer, then the acceptance of this happens. And as this wave kind of moves over the UK property market, things tend to get a bit more real. As more vendors are aware of their prices, they're aware things are going down, then the reports come out. As properties start getting, as sales get agreed lower, as sales exchange and complete at lower prices, then there's evidence and reports for these newspapers to start reporting on the fact there is a downturn. Now, to wrap up this video, I just wanted to give my opinion. Now, may I stress that this is purely an opinion and I am not giving anyone advice. Now, my opinion is very much that of Savills. I do believe there will be a short, sharp drop for the remainder of 2020 when things start to get back to normal. Now, I do think as the market starts to decline and property prices do start to come down, and that's apparent and perhaps promoted in the media, we will then see the opposite. I think there's a lot of people out there who could be unemployed right now who have actually been saved by the furlough scheme. So they actually have the security of their job. They perhaps now have some savings from being in on lockdown. They've also educated themselves because they've got a lot of time on lockdown. And banks are still lending, and they will continue to lend and increase their lending capacity as things start to recoup and get better. So meaning that money is easily accessible, people have confidence once again, and therefore first-time buyers, home movers and property investors will see the opportunity to jump into the property market at a lower price, and they will do so. That doesn't mean that's what's going to happen, but I sincerely hope it does. I do think the property market was due a boom, at least for several years, and this has really thrown a spanner in the works. With that being said, I think you should employ this strategy. If you're buying for the short term, wait. If you're buying for the long term, buy. If you're buying for the short term, 6 months, 1 year, doing a flip, a development, it might be the time to hold off and wait, or just be extra cautious. But if you are buying for the long term, 5, 10, 15, 20 years hopefully, then it is quite likely that these prices will very much surpass what you pay for the house. And therefore you need to still make sure that you get it for a good price, but you have the confidence of knowing that this property, you're going to sit on it for 10 years or for 20 years. It's going to go up in value, it's going to earn you an income. So as long as it generates an income, you get it for the right price, then you have the confidence of knowing that you can buy right now. Last of all, as I mentioned earlier, I wanted to put together a video for you because there's a lot of uncertainty right now and a lot of people messaging to ask me my opinion. Unfortunately, I have no crystal ball and none of us have lived through a situation like this before. There's my opinion. I appreciate you watching if you've got this far, and I would really appreciate it if you would like, comment, and of course subscribe. Thanks again for watching the video, and I'll see you in the next one.
Hey, I've been working like 3 jobs, probably why I never see ya, probably why I never have time for the fake friends I won't be ya. Oh God, I've been running now.